For latest updates, subscribe to our channel and press the bell icon.
So in today's session, we will talk about the import-related aspects which needs to be taken care of. What are the guidelines relating to that? All from the banking. I'll just start my presentation and then we there. Meanwhile, if in the chat box you can put up if you are actual importing some item, goods or services, just write yes there. The chat, just write yes if you are into imports and exports, rather imports only. One. बाकी लोग क्या करेंगे भाई? If only one importer is there, I will not get the queries. So if the queries are not there, then I will miss the opportunity to yes, custom broker and freight forwarder. Yes, good. So maybe we get some input from these people also. Another importer is there. Good. So maybe we get some queries from those who are handling import-related documents or those who are actually importers to know that what type of difficulties are there, and we try to provide certain solutions there. So here I start. FEMA regulations for importer, related compliance for customs broker. Now, it is not everything during this 1 hour or maybe slightly more time. We will discuss what customs broker needs to do. But we will try to see that how FEMA guidelines or RBI guidelines touch upon the customs broker here or there. Regulations for import. Now, when we talk of regulations for importers, we have to see the all-around aspects of all the regulations which touch upon when we think of imports. I today think of maybe switching over to a business module to do certain imports from any of the countries into India. I need to not only look at what can be brought in or what is the regulatory requirement on the RBI side, etc., but I need to have a all-around perspective relating to import framework. So what do we need to know? First and foremost, with the time I think that I will start import, then I have to think of DGFT. The first thing which I have to think of is IEC, Importer Exporter Code. And then I have to think of what can be imported into India, what items are there for foreign trade policy. Now, here is a catch. How do I get IC? I get an IC. When I ask for an IC or I apply for an IC, I need a bank account details. So I need an AD code details. So firstly, I have to think of an opening of an account. And then maybe once I open an account, I can ask the bank to give me an AD letter, which will give the AD code, authorized dealer code of that branch or a bank. And then with that, I can file for IC and then think of what all commodities I can import. So I have to go and look at the foreign trade policy. Now, from the foreign trade policy, there could be certain restrictive items, imports be only for actual users. Imports could be for trading, but restricted from certain countries. Some price restrictions could be there. Some quality restrictions could be there. Some port restrictions could be there. Everything needs to be seen there. Then comes customs, because customs is a check post for goods. All goods which are imported into India have to pass through the customs check post. So I should declare if I'm importing anything. If I am coming by air and bringing some small item in my package also, and but it is an import out of the country, other than those baggage allowances, I must declare it. So if it has a commercial value, we have various cases pending with the banks also, where somebody has paid advance against import, but he has not declared the goods when he was coming from abroad. Now we don't have a bill of entry. So wherever commercial angle or non-commercial angle, even if you are carrying in the pocket of your coat or jacket, when you are traveling from abroad, you must declare it other than your personal wares or personal goods for which the different aspects or different parameters are there. Now, in the customs, as per my understanding, every import which comes through courier, post, air or sea or road transport, everything needs to pass through that customs border. And even if the value of those goods is 1 rupee or 0 rupee, because if it's a only for the declaration purposes, sometimes invoice is there and there is no commercial value for it. Even then, if it is a free sample, $100, $50, $500, whatever the amount is, it must be declared to the customs, even though it is free for me, but for the country it is import. And customs would ideally levy the duty, import duty on that as applicable as for that particular commodity or HS code. So I must, for even for my sample, there is now regulatory requirement that bill of entry will be generated. And when we go ahead, we'll see what all issues are there on those bill of entry. Then there is an organization, FEDI, Foreign Exchange Dealers Association of India. There also what guidelines are there relating to import, what rate should be applied, how the maybe crystallization for an import bill under LC is to be there, those guidelines. And then International Chamber of Commerce, the global umbrella, what I can call it, as its guidelines and publications. Now, if my transaction is under LC, then I have a different rule, UCP to follow. If it is under collection, then I have a different rule, URC to follow. If it is an SBLC for import of goods, then some different rules to follow. Reimbursement, some different rules. There all different rules are there, but I have to be aware of those rules because these are so many rules that I have to link each one of it. I cannot say that I am following ICC guidelines, but I missed because of that a customs guideline or a FEDI guideline. It is not like that. Next will be foreign country regulation. If I am importing some item from somewhere, what are the restrictions or what are the flexibilities available there? What export regulations will apply there? Because it is an export from another country, I must find all those things. It is not only that I go and enter into a contract with somebody and do it and then find out that some of the other problems are there. Now, why export restrictions are must for us? Many a times we send advance remittance for import of goods. And then the buyer says this is not allowed by the government of that particular country. What to do about? And we are handling such cases, we are facing such cases where the supplier does not refund the money. Why? Because the importer in India did not see and did not know that whether that export is allowed under a export license, and whether the supplier who claims to a supplier has an export license or not, whether he is authorized to export that item or not. All those things are there. Then variety of risks will be there. Maybe right from our credit risk or right from our foreign exchange risk or maybe transit risk, etc. How to take care of those risks we need to be seen. Then our banking regulations. Banking regulations with my account, whether it is a KYC compliant account, if I am using credit limits or not, what type of transactions are there, whether what type of collection regulations are there, what type of LC import regulations are there, all those regulations. And more particularly, now with Reserve Bank of India freeing most of the guidelines towards the banks on charges, handling, etc., etc., I need to be aware about the circumstances and aware about the environment, particularly what my bank is doing, what other banks are doing. So I must be able to know that what is happening in the market. And the foreign exchange regulation. Now, when I'm importing goods or services from outside the country, I need to pay for it. When I need to pay for it, it is a drawing of a foreign exchange, drawal of a foreign exchange. Maybe if I say that, sir, it is a rupee invoice I am paying through Moscow or SRV, even though it is a rupee invoice, but it is a drawal of foreign exchange. Even if I say, sir, I will import something, but I am paying by a credit card, then also it's a drawal of foreign exchange. So drawal of foreign exchange has got a very specific rule there that needs to be. Even if I open an LC, the day I open an LC, the drawal of foreign exchange is committed by the bank on my behalf. So I need to understand the foreign exchange regulation. Now, when I talk of foreign exchange regulation, our umbrella act is Foreign Exchange Management Act 1999. Now, this act is framed by the government of India. So the parliament has framed it. It came into effect from 1st June 2000, year 2000. And the delegation under that FEMA has been handed over to Reserve Bank of India. Now, Reserve Bank of India also has issued directions to authorized persons on import of goods and services. And we have a latest amendment of 1st of October on that. Now, how does RBI monitor that all imports are logged in and how imports, whether they are paid or not. So within the framework, there is a tool IDPMS of Reserve Bank of India, through which monitoring is being done. Now there is a super regulator also, enforcement director. While RBI also has a power to maybe control and regulate things and even go for compounding, etc. But enforcement directorate is somebody which has a power under PMLA Act as well as FEMA, both them. Let us have a look at certain instructions or guidelines which are there in FEMA, which are linked to imports. So we see that this Foreign Exchange Management Act has come down from Foreign Exchange Regulation Act. Now this Regulation Act was something where it was, we can call it a criminal act. And Foreign Exchange Management Act is a civil act. So from regulatory regime, we have come to the management regime. Under regulatory regime or a criminal act, the criminal or the person who is charged, even though he may or he may not be criminal, but the person who is charged has to prove that his innocence. While in a management act, it is a civil act. The prosecutor, the government body, the Reserve Bank of India, the enforcement director will have to prove that I have done something wrong or the party has done something. It has been brought with an objective of facilitating external trade and payment. So it is not a restrictive act. It is a facilitating act. And it gives various powers. No, it also has various modalities to promote trade and business and the markets in India. While it is applicable to Kashmir to Kanyakumari, whole of India, but it is also applicable to those who have outfits abroad, the offices abroad, or maybe the units abroad, which are owned and controlled by persons resident in India. So even my subsidiary abroad, or maybe some 5149 JV abroad, or a business office abroad, or a business soliciting office abroad, or a buying office abroad, everything this will cover. FEMA has to be abided by those units also. And Section 47 is empowering RBI to frame regulations. Now, under Section 11, RBI gives directions to the authorized persons to see that how the foreign exchange business is to be conducted with their customers and implement the regulations. So, variety of instructions are there, and the master direction on import of goods and services also is one of the part of the FEMA Section 11. So what does our bank become now? Our bank becomes an agent to RBI. RBI does not open our account. RBI will not handle our remittances. RBI will not handle our bill of entries, etc. So banks become the agent of RBI to handle. So what do? For facilitating external trade and payments and related compliances. Now the emphasis in the last line is that they are the operating arm. Several times in the various forums and maybe in the one-to-one meetings also, people say, "Sir, bank itna sawal kyun poochti hai? Why does bank want a CA certificate to certify itself? Why does bank want supporting documents, etc." And even after this 1st October guideline, today also there have been a lot of discussions on how this is to be implemented, what banks are going to do, whether we are free to export, whether we are free to import up to 10 lakhs or not. No. But on one side, they are there as an operating arm for execution of transactions, helping out the customers to do the export-import transactions, but they are also given the responsibility of ensuring compliance. Now, when this thing comes, the responsibility of ensuring compliance, so everywhere you will find that banks, as per their due diligence, two due diligence are required. One is on the customer, another is on the transaction. Transaction to transaction satisfaction has to be there, and customer to customer satisfaction has to be. Now, Section 10 also says that RBI may allow banks to conduct foreign exchange business. Now, what does this mean? This means that all banks does not have AD code. So we may have several of the cooperative banks which do not have AD code, which we may have smaller banks. Small finance banks are there. They may not have AD code, but their banks are getting upgraded into full-fledged banking now. So we have recent couple of banks, and we have a good number of cooperative banks also, which are having the authorized dealer. Now, this authorized dealer will have an AD code. And why this AD code is important? Because I need to punch that AD code and register that AD code at various ports. So when I file bill of entry that is picked from there, also I need to file it for the purpose of refunds of drawback or any other incentives from the government. I also need to file that AD code so that my bill of entry or shipping bill goes into the direct bucket of that particular bank. If my clearing agent or if my CHA or my courier company does not use AD code, and we have got in the past, I understand now this has made mandatory, but in the past, maybe courier agencies from before 2022 January or even after 2022 January when this was implemented, ECCS, after that also they have in several cases have not put the AD code, and now those cases still are pending outstanding that how to close, because it will not come into any bank's bucket. Uh, FEMA is a user-friendly law. What does it say? If some contravention happens, there is an authority. I can go and request the authority for by filing a contravention application. So I can go for a compounding where certain penalties have been prescribed. So RBI will say, and if the RBI feels or the enforcement feels that the transaction violation has not been deliberate, but it has been one of the transactions, then maybe you get out with a very small fee also. So I have earlier seen cases where lakhs of rupees of penalties have been levied just because a corporate having several of the chartered accountants lawyers to its disposal has not complied with certain regulations. Lakhs of rupees of penalties. And on the other side, we have seen some of the individuals or proprietorship firms, they have just violated because they did not have suitable guidance. So their penalties could be 1,000 rupees or maybe thousands and as low as 58 rupees, 57 rupees. I've seen the penalties in some of them. The maximum penalty which can be levied is up to the thrice of the sum. So three times. If your bill is of import, bill is of $1,000, $3,000 penalty. But this is very harsh, very extreme. It is only the cap which has been put under the law. Now, what does FEMA say about imports? Import, which is grammatical variations and cognate expression, means bringing into India any goods or services. As soon as I bring some goods into India or I draw some services from abroad, it is to be called as import. Now, when I'm importing something into India, it is it must be paid, because what I am doing, I am getting goods from abroad, and it must be paid or settled in the approved manner. Why this is required? Let us first understand. People say that I have imported goods for $500, I don't want to pay now. The other guy who has supplied you from, say, China or some other country, Japan or Indonesia or Malaysia, Singapore, who has supplied you $500 or 5,000 worth of goods, if you don't pay him, what he will say? What we sometimes say of some other countries. Sir, that country, I have sent advance remittance, they are not supplying, they are all miscreants. Why I should not pay for the goods imported? If I do not want to pay, then I must declare to the government that for what reasons I am not paying, and I must settle that bill with the concurrence of the supplier. It is not that I can do it on my own. They have also got their grievance portals where they can file grievances with DGFT also now. So we have to be very careful that if while we are importing or we are allowed to import goods into India, we must pay through as per the permissible currency account. The master direction on goods and services, everybody user, maybe a CHA or a freight forward or custom broker, whatever by whatever name you call, or your importer or your staff of importers, even the chartered accountants who are handling the business of importers must go and read this master direction on import of goods and services, which has been recently updated on 1st October 2025. Now, the first paragraph of the master direction issued by RBI says import trade is regulated by DGFT. This means that we do not want to involve ourselves in what is being imported or what is permitted to be imported. It is governed by DGFT. It is a wing of Ministry of Commerce. So this is very important. But what does it say? Banks should ensure that imports into India are in conformity with the trade policy in force and foreign exchange management current account transaction rules. So whether the import is as per foreign trade policy Again, this is to be seen by AD banks, the responsibility part, and the Management Act, the FEMA current account rules, whatever is there, that also has to be seen whether that import payment is permissible or not, or waiver is permissible or not. If the documents are under LC, then UCB is to be followed. If it is an import of drawing and designs, then the provisions of Research and Development Sales Act needs to be followed. And wherever it is subject to income tax, then tax provisions need to be followed. RBI has clearly said that we have nothing to say about tax provisions. Now, where do tax provisions apply? In imports, or in maybe getting the imports financed, our buyer's credit. Buyer's credit, we are paying interest. And there is a section under Indian income tax where it says that the tax laws will not apply there. There is no TDS to be applied when you are remitting the money abroad, including import of goods and services. But where you are paying an interest, or where the service component does not have a bifurcation that what is the profit or what is the component of that, there in that case you have to deduct a TDS or declare under that particular 15 CACP form. So RBI said that we are not going to look or say anything about the tax part. For the banks, it is very important and more stringent because here the money goes out of the country. So banks are more fussy on the KYC, knowing the customer, the bona fide of the transactions, etc. On each and every occasion. And we need to provide as an importer, as an agent to importers, we need to provide the sufficient satisfactory proof relating to the businesses as also the transactions. Now the purchaser of foreign exchange. The owners of use of the foreign exchange or the currency which has been drawn from a bank, maybe by way of an advance remittance or by way of a drawing through a credit card for payment of imports or for any other purposes, lies on the user. It is not on the bank. Bank will release if you give the proper reason for the drawing of foreign exchange, which is within the foreign trade policy as well. But there is a FEMA declaration, and this is ignored. I have handled certain cases in the past where the regulatory authorities have asked the importer, sir, you have given in writing, you are going to abide by FEMA. Then you cannot say that I do not know, or I was misled, or the bank did not explain me, or my chartered accountant did not tell me this. You cannot say because you are signing on a FEMA declaration for each and every transaction. Also, whenever you are making payment for imports, it is incumbent upon an importer to file bill of entry, customs assessment form, or postal appraisal forms, etc., to give the proof that the goods have been imported. Now, here for services, we don't have a customs clearance, so we need to provide a declaration as well as the chartered accountant. But what is going to come now? It is already there in some places for export. It is going to come that for all import declarations will have to be submitted to the bank now. And then only the entries will be created in the IDPMS to close the wire. Let us now move to monitoring by customs and all. So normally our importer cycle will be what? Import order placed, goods received, custom cleared, bill of entry generated, payment sent, my books are closed. एक बार credit किया, एक बार debit किया, everything is closed. My purchase books are closed. My maybe suppliers accounts are closed. But it is monitored. And how it is monitored? It is monitored through bill of entry. Now, bill of entry by import by air or sea are from EDI ports, electronic data interchange. So they go into IDPMS through IceGate model. Import by courier is also now EDI from 27th of January 2022. So it is also now an EDI port, it goes under through the IDPMS. Only imports by post, they are non-EDI as of now. So manual bill of entries are being, maybe while the filing is online through the TCS software, but you have to generate a manual bill of entry and those documents need to be. So we have what? We have sea, air and land. Our land borders with Nepal, Bhutan, Bangladesh, etc. So it is an IceGate for courier ECCS and postal bill of entry is there, it is not. Now our identifiers are port code IC. IC is what? Importer. AD code is what bank I have declared. Bill of entry number and amount. These things control the entire transaction. The payments, banks will have to create an ORM. So it could be a foreign currency payment, it could be rupee payment through Vostro account, it could be foreign currency account abroad. Similarly, EFC, similar to EFC, which was introduced sometime this year only. So even if you pay from your account abroad, that those documents and those entries are required to be closed in the system if it is an import into India or if it is the use of those funds outside India. And then rupee accounts, either it could be a Vostro account or an SRV account, or it could be rupee entry related to payment through credit card, etc. And then our payment gateway systems, which are PayPal, Payoneer, Skydo, etc., where up to 25 lakh rupees this is permitted. You can pay outside, and you have to get an ORM generated. So this is how it is controlled. The the shipment is received. When you file a bill of entry, the customs will approve it, and those bill of entries through IceGate or ECCS go into IDPMS by the customs department. This is an RBI server. Based on AD code, it is distributed to banks. On receipt of bill, you will go to the bank and make the payment. When the payment is made, including the advance payment, an ORM is created, and now you have to tell the bank that this bill of entry matches that ORM, and that this will be normal. Now here there is no process to go back to DGFT to generate a BRC. But RBI has to monitor that whatever bill of entries have been generated are knocked off through ORM or other ways and means which are suggested. So this is just a snapshot for a bill of entry. You can go and check your bill of entry in the IceGate or ECCS. Those CBs are there, courier bill of entries. Now this is just a snapshot of how the IDPMS would look like. There is a server of from RBI in the center. On one side, customs is there. At the end of the day, whatever shipments are made through various EDI ports, ECCS, IceGate, that data goes to Delhi. From there, it is pushed into the RBI server. And on the basis of AD code, this is distributed to AD banks next day morning. So say today morning, our bank A, when they opened up and they downloaded the data from RBI, they would have come to know that how many customers of mine who have used AD code of my bank and paid import shipments or got the import shipment cleared yesterday from various ports, airports, courier terminals, etc. Say 500 for a bank. And it will also know that till today, how many total pendencies are there? 500 plus maybe 5,000 or 50,000 up to the previous day. Now, when the outward remittance is sent, an ORM is created by the bank, and then this needs to be closed. Now, this effective date for IDPMS is 1st December 2016. So, largely all bill of entries from EDI ports from 1st December 2016 or even prior to that. In some places, the data from 1st October has been uploaded. In some cases, the data from 1st April is also uploaded. So, we have to go and see that what data is uploaded there, but not prior to 1st April 2016. Now, this monitors the bill of entries which are uploaded, cleared and uploaded by customs. The outward remittances made by the banks for import of goods or services also. If I have an AD, if I've used an AD code of bank A in the bill of entry, and now my remittance has been sent through bank B. So bank B does not know where the bill of entry is. Bank A does not know where the payment is. So bank B, I have to submit the bill of entry, which will have a AD code of bank A. Bill of entry is to be submitted to the bank from where I have made the payment. So bank B will then pull that bill of entry. It is as equal to AD transfer from bank A's portal by submitting a request to the system. Then they will be able to match it and then close it. So the closure of bill of entry is always to be done with the bank which has made the payment. If it is a closure other than payment, then you have to go to bank A again. Suppose there is a write-off required, then bank B will not be, bank A you will have. Now the data related to import bills and payments closed. It is a system now, it is all electronically controlled by a press of a button. Anybody can know that what are the write-offs allowed, why every time discounts are there, what high prices are there, low prices are there, overvaluation is there, undervaluation is there. Everything can be filtered here. This is a data reservoir now, both the IceGate data, the customs data, and the bank. Now the bill of entry, if I imported first, then payment should be made in 6 months period. If I made advance payment first, then import should be made in 6 months. For capital goods, it is 3 years. So everything beyond 6 months is to be treated as overdue. Now, once it is overdue, you start getting reminders. Banks are required to send reminders after 90 days only. And now with the electronic, banks are sending reminders every month. Or if your bank is on the technology platform, where you have a link for that technology platform, you can on your own laptop go and then see the data every day. Even if you have imported something yesterday or made the payment yesterday, you can go and see the balance today, whether that is reflecting in the system or not. And there are write-off rules also. For import, it is very stringent. For exports, it is relaxed. But imports very stringent. Write-off data is also there. Extension of bill of entry is also permitted if I am not able to make payment in 6 months. Now, unlike in exports, there is no caution listing here. For import, if there is delinquency, non-payment, delayed shipments, anything is there where I have no explanation given to a bank. If I am not cooperating a bank, if I am not contacting a bank, payments pending or imports not made and bill of entry pending, payments not made, may be reported to DOE directly, Department of Enforcement. So this is a third regulator where the data will. So as an importer, I have to be very careful that my data remains within the banking system. I am not a defaulter to any bank. Now, why does this happen and how does this happen? I have changed my office from A city to, I've shifted my office from A city to B city. And I am continuing to get import import parcels where I'm using the AD code of bank A in A city. And when I have changed the office, everything is changed. The address is changed. The email address of the accountant which was given in bank A in bank city has left the office. So the new account with a new bank has got a different mail ID. So whatever effort is being made by bank A to send the mails or maybe to touch base at that address, send registered post, etc., everything will come back. And I have got maybe 50, 100 bill of entries pending there, which I have not bothered to close. What the bank is supposed to do? How the bank is supposed to chase the importer? How does he know that where you have gone? The neighbor there says, sir, यहाँ थे कहीं चले गए. कहाँ चले गए पता नहीं है. Any address नहीं है. Because we have only told him कोई पूछना है तो मत बताना कहाँ गए. So then the bank what will do? They will report it to enforcement. And enforcement can dig out a person anywhere. They will take the data from the bank, all contact numbers, all email IDs, etc., and then trace out to you in a different city. And then what do they want? They at times want the data relating to your all import-export transactions right from birth. जब से company चालू किया तब से data दे दो. If somebody asks for your data for last 15 years or 10 years, how easy or difficult it is? They can get the data from the bank. But they want the importer or exporter to give the data. And then you are in a loop. Gone. So my advice would be that we should always see that if I was dealing with some prior bank earlier, even now go to that bank and see and ask them, sir, please check the IDPMS, EDPMS. I must not have any pendency there. If there is no pendency, give me an NOC. Give me a clearance that there is no pending. Try to close those accounts. Try to update the email IDs of new persons. Now, I have seen the banks which are asking, sir, in our system, we can do up to 4 email IDs. Owner sometimes does not want to give his email ID कि मेरे को रोज एक mail आएगा बैंक का. But whether it is good or bad, your employee, if he does not heed to the mailers from the bank, how does an owner know? Only he will know because if he has given his own email ID to the bank. Give up to 2 or 3 mail IDs. Don't depend on one person. And don't give an email ID of a chartered accountant who is an external chartered accountant. Give it somebody from your maybe the owners or the accountants working for the bank, for the company. It is always better. Chartered accountant you can give as an addition, no problem. So up to 3, 4, 5 email IDs can be registered with the bank and go to your all previous banks to see that whether anything is pending there or not. Now, prior to the implementation of IDPS, we had EDI bill of entry, which is triplicate exchange control copy. So original needs to be given now. Non-EDI quadruplicate exchange control copy, double full-scape size, green double full-scape was there. Somebody's mic is open. Please check. अपना mic check कीजिए. Okay. So the EDI port triplicate is a computer generated stationery. Non-EDI is quadruplicate is a manually prepared double full-scape side green color bill of entry, or it could be yellow also sometimes. Then courier also there were 1 to 10, 10 to 1, 1 to 1, etc. Different types of bill of entries were there up to 22, January 22. And postal was always manual earlier also. So we also required the challan, wrapper, declarations, etc. Now beyond that, after December 16, the EDI ports, there is no original exchange control. Only a copy, importer's copy and customs copy, two bill of entries are generated. Original exchange control copy is not there, but the data is transmitted to banks through IDPMS. Non-EDI ports, triplicate, quadruplicate would still be there. And courier from 27 January 22, data has started flowing into IDPMS. Now, some data which has not flown into IDPMS even after 27th January is because the courier companies at times have not used the AD code. Even if they have used the AD code, their data has not been pushed properly in the system. It has not gone into ECCS. If it has gone into ECCS, then there could be some space, hyphen, data mismatch, etc. So it is not transmitted to IDPMS. And if it is not transmitted to IDPMS, then our ORM is remaining pending. Now, the bigger questions. Whether bill of entries for samples imported are coming into IDPMS or not. Yes. Even though you are importing samples for $100, the government will ask for a duty, maybe sir 10% duty is there. That 10% duty equivalent to $100 is required to be paid to the customs. And when that duty is required to be paid, you have to file a bill of entry. Although it could be a no foreign exchange involved, but that bill of entry needs to be filed, duty paid, and that should flow as a sample bill of entry in the IDPMS. If the bill of entry is filed properly, while writing that this is a NFEI, no foreign exchange involved, samples, then banks are coming forward to close those bill of entry. If it is written there, it is marked there. If it is not written, not marked, then we have a problem. Now, what are the modes for bills and payments? So, advance import payment is one, where I pay first and then get the import. So here the ORM is created first and bill of entry is later. So when in such a case, I have to, after the clearance, I have to give a copy of the bill of entry along with the payment details to the bank, along with the copy of invoice, bill of lading, etc. So that the bank can check the documents and close the bill of entry and ORM. If it is a bill for collection or a LC bill, then for site, the ORM will be first, the payment will be first, and then the clearance would be there. So there also I have to give the bill of entry later. But in nuisance bill, the bill where the 90 days payment terms are there, I can get the bill by just signing a bill of exchange. So that bill of entry is generated first and ORM later. So ideally, the bill of entries are given to the bank at the time of making payment. And direct import bill where the payment is not made, the import comes directly to the importer. So there are certain restrictions, guidelines are there, and ORM is created later. So the banks have been instructed that wherever direct import is there, you must make remittance only after verifying the bill of entries details in the ID. Let us now go and see on the FEMA and RBI guidelines. So for the audience, if you have any questions, please put in the chat box. Towards the end, I will take all the questions. In between, if any questions are there, just put it in chat box so we can take it from there directly. Now, what are the RBI guidelines relating to imports? So first is the timeline. timeline is 6 months normal. Normal import 6 months from the date of shipment. If you have imported something, 6 months is the normal time. Beyond 6 months, also the delays can be there. We'll see what. In case of capital goods, 5 years from the date of shipment as per trade credit guidelines. Import of books, there is no time limit, but ultimately I should not keep it open for 5 years, 10 years, 7 years. Now, delays in payment in case of normal goods are normally considered by banks up to 3 years with interest or without interest also. But some of the banks without interest are allowing after 3 years also. So those banks have their own internal guidelines. So we need to see. I was just engaging with a public sector bank. They said, sir, no, nothing after 3 years. Now, if it is not paid in 3 years also, so it is not paid in 6 months also, then you should go and tell the bank about the extension. So that what happens that your overdue bucket goes back. If it is overdue today, your overdue bucket is pushed back by 6 months. So because maybe it could be a quality issue, dispute with the supplier, it could be financial crunch. The goods have been sent which are not maybe taken off in the market. Or any of the conditions could be there. Now, on deferred payment basis, for capital goods, it is 3 years, and 6 months to 12 months is the period for normal goods, which are to be considered under the trade credit guidelines. And we have a separate master direction here: external commercial borrowings and trade credit. Now, trade credit guidelines are separate other than the import guidelines, but trade credit means maybe financing of import transactions beyond 6 months. 6 months is normal period. So suppose there is an import bill which I receive, which is initially drawn for 270 days. It will attract trade credit guidelines because 6 months, beyond 6 months, it becomes from normal, it becomes abnormal. So suppose it is a capital goods beyond 6 months, then up to 3 years it is allowed, but trade credit, either it could be buyer's credit or supplier's credit. Then import of books without restriction or extension of time, 6 months at a time. Third party payment for imports is permitted provided there is a mention in the invoice, there is a tripartite agreement or irrevocable purchase order mentioning the name of the supplier and the consigner, and the bill of entry must have a declaration about a different consigner, different supplier. Now, our problem is not here. Our problem is that I have made payment to A and goods have been received from B. Now, how if I receive goods from B which does not have a mention of A, then I am in a problem because the bill of lading does not have a mention, the invoice does not have a mention. So if you receive such an invoice, always ask the supplier to issue an invoice from A, or even if B is issuing, then he must mention that the goods have been supplied on behalf of A. So A is the supplier and B is the consigner. Now, what happens that if this is a subsequent event, then there is an issue relating to the due diligence on the transaction, the relationship between the both overseas parties. It is not a money laundering problem, etc., etc., required to be seen. The internal guidelines also. So bank will have their own internal guidelines to do the due diligence. Now, banks for third party have been pulled up by RBI also or by the other regulatory authorities also. So that is why they are more cautious in allowing third party payments. Advance against import normally up to $2 lakh is there. Beyond $2 lakh, it is for your safety that you must insist on bank guarantee. Now, $2 lakh is a big amount. I know of an importer, a beginner, who has been asked to send $30,000 as advance, and now that supplier is not available. He was getting certain items at a throwaway price. Market price is $10, he is getting it $7. And he had sent $30,000 of advance payment. Now he is not able to trace the supplier also. Not at address, not at mail, not at telephone, nothing is there. Why take a chance? It is your money. All the government allows it, but you have wasted your $30,000. Not it is not your $30,000. Now a bigger problem that you are allowed to initiate recovery efforts. Otherwise, write-off is not possible. Banks will ask for different efforts, and you never know that this goes into the radar of some regulator, whether it is a money laundering transaction or not. So we have to be very careful on that. And banks, otherwise also they have been permitted to allow advance remittance up to $5 million for larger corporates. They know that if Reliance and Adani's and Tata's and Birla's are importing something and if they want to send $5 million of advance remittance, they will do their own due diligence. $5 million का रिस्क अगर कोई ले रहा है तो उसकी कैपेसिटी है. I go tomorrow morning and tell my bank, sir, I want to send an advance remittance for one lakh dollar. Even then, bank will not send it. अरे रोज तो 50,000 का बैलेंस रखता है, आज $1 लाख कहां से भेज रहा है? Then there will be a problem. But for larger corporates, $5 million per year. Now, for advance remittance for by government department is $1 lakh. Now, even up to $2 lakh, banks are not allowing advance remittances, and beyond $10,000 or beyond $5,000 also, there are various requirements, checklist, KYC requirement, due diligence requirements on the overseas buyer, Indian supplier, etc. And we have seen small amounts of imports where banks have burnt finger because of those frauds. Import of parts for mobile phones, spare parts for mobile phones, small parcels by courier, and lakhs of dollars sent gradually in Delhi 5 years back, 7 years back. Lakhs of dollars. It is a money laundering. The banks are wary of that, and even people who are into the trade, they should know that they are not charged with such RD. Then for rough diamonds, various guidelines are there relative to Gems and Jewelry Export Promotion Council, the site holders, etc., etc. I will not cover this here. Import of services, the general or the total approval is $5 lakh, but banks will not allow $5 lakh initially. There will be the grading of $10,000 to $50,000, $50,000 to 1 lakh. But in goods, I am supposed to give the bill of entry to the bank. But here there is no bill of entry. So import of services is supported by a declaration by the importer and a chartered accountant certificate that these services have been imported by the company. Also, there is a requirement that such an information should be submitted to the nearest or the applicable customs office at the port, airport, etc. And I am afraid many of the people are not doing it. And in one of the cases we have seen the regulatory authority asking that where is the information you have given? I must comply with the guidelines and send it. Even some of the banks are not asking for it, which is against the rules. Interest on import bills can be paid up to 3 years. Beyond 3 years, if you want to pay interest, then you have to go to RBI. So now, if the total delay is 3 years, and interest is to be paid, okay. But the total delay beyond 3 years, the interest is to be paid up to 3 years only, then you have to go to RBI. Now, interest is paid at trade credit guidelines, which is alternate reference rate plus 300 basis points. So just I saw today only that overnight rates are 420 for dollar and 90 days 434, or exactly it was 3457. Usance bill, if I'm importing, say I'm importing something at site at $100, it means that there is no interest component. But if I'm importing something at $100 with 90 days tenor or 180 days tenor, it means that interest component for 180 days has been built in that $100. Nobody gives credit for free. Some interest is there. We are seeing 90 days interest rate 4.34, 180 days could also be around 4.40 or so. 4.5% का interest cost में already लगा हुआ है. So let us feel that for 180 days, if the interest rate is around 4%, for 180 days, the cost is $98, then interest is $2. Now, our importer wants this to be sent in 90 days. What is the eligibility of the supplier to get the payment? $98 plus 3 months interest is $1 only. So the banks have been asked that proportionate interest should be deducted if there is a prepayment of usage import. And there have been lot of dispute. बहुत customers के साथ में, buyer के साथ में, supplier के साथ में बात करना पड़ता है कि क्यों कटेगा. It has to be deducted because it is an outflow of foreign exchange. And also you see that wherever you are paying interest or deducting interest, this is properly marked in IDPMS by banks. Otherwise, what will happen? That interest component remains open and you get a reminder for that. So even the customer does not know ये reminder क्यों आ रहा है, मैंने तो pay कर दिया. You have to see that. Direct import bills up to $3 lakh allowed, largely applicable to proprietorship, partnership, HUF, trust, society, etc. For all others is permitted. So wherever you want to import more than $3 lakh, these 4-5 category, then in that case it has to be seen that your import does not come directly. The document should come through the banking channel. Otherwise, RBI approval will be required, and that will be more difficult thing to extend to RBI. For specified sectors, also import of rough diamonds, semi-precious, precious, $3 lakh will limit. Otherwise, for diamond, rough diamond, only for site holders, it can go beyond 3 lakh. Now let us come to evidence for import, that is bill of entry. Bill of entry is to be submitted within 90 days from the date of payment or shipment. Beyond 90 days, you will start getting reminders. For software or services, a declaration CSD is required. For high C sale, also bill of entry is required. And wherever the outward remittance is being sent, ORM is created by the bank. So bank which has created an ORM or from where you have sent the remittance must be submitted the bill of entry. Now the last line, one-to-one or one-to-many. I have imported goods for $1 lakh. I have a $1 lakh bill of entry with bank A. I can give it to bank A. No problem. But I have $1 lakh import, advance remittance sent through bank A, and then I have imported in 5 parts, 20,000 each. So I have got 5 bill of entries now. These 5 bill of entries then can go to that bank one by one, and bank will reduce that amount by 20, 20, 20, 20. And 1 lakh is good. But look at the other way. I have $1 lakh import. I have made 5 payments of $20,000 each, 2 from one bank and 3 from another bank. So what will happen? I have an ORM of 40,000 with one bank and 60,000 with another bank. I have to give a copy of the bill of entry to bank A. Sir, close my bill of entry for $40,000. He will leave a balance of $60,000. I have to give a copy of the same bill of entry to bank B, saying that 40,000 remitted through bank A, 60,000, this is the bill of entry, close your ORM. One-to-one or one-to-many. Extension is permitted. It could be advance sent, goods not received, strike at port, lockdown, supplier not sending goods, etc., legal action, dispute with buyer, etc. Anything could be there. Now, like in exports, there are very strict guidelines for write-off of imports. Write-off of ORM of bill of entry is only allowed up to 5% of the value of that either remittance or the bill of entry. And it could be a reason of short shipment, bank charges, etc. Charges deducted. So if I send $100 to somebody and he deducts $2 as bank charges and sends me goods for $98, I can close it. Or if I received an import bill for $100, where the bill of entry is for $100, but I deduct $2 because of certain dispute charges, breakage, etc., up to 5% of the value, I have an ORM of $98, I can still close. But beyond this, it is difficult to close. Now, it is permitted to close beyond 5% only with the specific reasons relating to quality issues or goods destroyed at port, auctioned by customs, health authorities, etc. I have sent advance remittance for $1,000. When the goods came at port, Indian port, they were contaminated, so customs has destroyed. Even the port authorities have destroyed. And they will give a certificate that these goods have been received, but they have been destroyed. Now the supplier is not going to pay you back. He has already sent the goods. I can go to the bank and give the certificate and close it. Or because of certain other reasons, short shipments, there is a dispute with the buyer on quality. It has been going for long. Ultimately, I've decided to write off 25%. I can do it. Okay? Subject to no civil suit or criminal suit and case not being handled by any other regulatory authority. Then there are specific rules related to import of gold jewelry, import of precious metals, which I am not going to cover in detail because it's a very sector-specific guidelines. Let us come to the latest relaxation. RBI a couple of quarters back had allowed export shipping bills up to $1,000, largely keeping in view the e-commerce trade and small value exports, to be closed in a softer manner by maybe certain declarations, etc., on the export side only. And that $1,000 window was open till 30th September. So, in the policy and subsequently by way of a circular APDR 12 of 1st October 2025, RBI has increased this limit to 10 lakh rupees and also used this facility or allowed this facility for imports also. So, what does it say? To facilitate timely closure of entries in EDPMS and IDPMS import side and to reduce compliance burden on small importers and exporters, following directions are being issued. What does it say? AD banks shall adopt the following procedure while closing entries, including outstanding entries in EDPMS and IDPMS of value equivalent to 10 lakh per bill per entry bill or less. The value should not be more than 10 lakh rupees per bill of entry or shipping bill. Shipping bill wise or bill of entry wise, if the value is 10 lakh rupees, then the banks have to adopt softer stance, not the regular documentary requirement. But still, what is the onus on the bank? I will tell you. It can be done or adjusted basis a declaration by the exporter or importer, and after doing the reconciliation that the payment has been received or the payment has been remitted for imports. Now, when I go and read it between the lines, what does this mean that the payment for import has been made? I have an open bill of entry for say $5,000. $5,000 is what? 4 lakh 50,000. Now I have to give a proof to the bank that I have paid 4,50,000 rupees for this import by way of some method which is permitted under the law. I cannot pay rupees to the savings account of the supplier here who is an NRI. No, it has to be some proper channel. So there is a question that whether ORM is to be there or not. So in my view, ultimately bank will have to create an ORM. The next one, reduction in declared value or invoice value of the shipping bill or bill of entry shall also be accepted based on the declaration by the concerned exporter or importer. Now, shipping bill declaration is a different manner because there is a write-off process. There is also a 5%, 25% invoice reduction process. For bill of entry, we only have 5% space. So I can only accept 5%. Beyond that, write-off process is there. Whether this is permitted for $10 lakh or not, it is again a question. Then the third one, quarterly adjustment can be allowed. This is largely seen on the e-commerce side, not on the general imports. E-commerce, what happens that if I am importing through maybe Alibaba or and making payments through PayPal, Payoneer, there could not be the exact inflow outflow. But for export, there could not be exact. But for import, there has to be exact. So largely this 10 lakh window is available for import also, but implementing by the implementation of the bank will still be on the similar basis. What I have to do? I have to explain to the bank that this is the ORM or this is the pending entry in some other bank. Today only I was talking to one bank, and who creates an IRM, ORM? The bank which has handled the money. That is again a thing. I may have to declare, give a CA certificate. How soft stance the banks are going to take under that. And one bigger part, or which I have not mentioned here, I think, which is that banks should not levy overdue bill charges on that. So this is one relaxation given to them. That up to $10 lakh bank should not charge. This is largely for e-commerce exporters, not for general one. If I am importing $5,000 parcels regularly, bank may or may not adopt this particular procedure to close our bill of entry. This is what I wanted to convey. It's my opinion. The banks are yet to frame a policy under the RBI guidelines, but let us see how it turns out. The last segment almost, high sea sales. Now, high sea sales are also imports into India. So how does it work? High sea sales mean sale of goods by the actual importer mid-sea to some third party when the goods have not touched or arrived at port. So what is high sea? High sea is 7 nautical miles beyond our shores. Import documents are normally in the name of the actual importer, who is an high sea seller. He sells the goods to another party who is a high sea buyer. And there is a high sea sale contract between them. Goods are released from the customs by high sea buyer. And the bill of entry is in his name. High sea buyer makes the payment to the actual importer in rupees. So the actual importer is now required to send the remittance and get an ORM created. But our problem is that both these parties are having different ICs and different banks. So how does it flow now? Let us understand through a case let. A imports goods from B in China for $10,000. While the goods were on ship and sailing towards India, A sells the goods to C in India. So A becomes the HSS seller and B becomes the HSS buyer, and they have an agreement in between. What does this agreement say? C will pay rupees to A and get the documents duly discharged in his favor. So bill of lading is discharged in his favor of C by A. He goes to the port and collects the goods. So he files a bill of entry in his own IC, but he should give the copy of the HSS and the original import invoice. And then the bill of entry must have a mention of high sea sale agreement. HSS, goods under HSS, HSS seller name is A, IC number so and so. Now A comes to his bank, he is the actual importer, he has to send that $10,000 to the overseas supplier B in China. So B has got an ORM, A has got an ORM, which is own bank, which is own IC. So the bank for A is AA and bank for C is CC. In one bank, I have got an ORM, in another bank, I have got a bill of entry. Now, C ideally has to give a copy of the bill of entry to A, and A should submit it to the bank for closure. But my problem is that at times, HSS mention is not there on bill of entry. And the merchant says, sir, I have got it filed, but because of some non-declaration by our CHA or freight forwarder, this is not been done. I am not sure whether the wrong documents have been given or the filing is on the IC of some other part, A instead of C. All those issues could be there. And the second problem is that HSS buyer, because of the internal disputes, does not provide the copy of the HSS bill of entry to HSS seller. And because of that, the ORM which HSS seller is pending, the bill of entry which HSS buyer is pending. And I have seen a couple of enforcement cases going against that. So, as per our role of a freight forwarder there, if the transaction is under HSS, proper mention of HSS, IC, etc. must be seen and verified, and got it verified by understanding the nature of the transaction. A couple of FAQs. Advance against imports made in 22 goods not yet shipped by supplier. Can we get goods from another party now? So it's a renewal of an order. I can always make the party who has sent an advance, to whom the advance remittance has been sent as a supplier, and consignor as another party, and do it now. Get it done. Advance payment for $25,000 made in June 23, goods not yet shipped. Can we write off? Yes. But we have to see whether 25,000 write-off is possible or not. What all efforts have been made for write-off or not. All those things will have to be seen. Advance payment for $10,000 made, goods supplied for $9,800. $200 is what? Within that 5%, you can go to the bank and say, sir, I've got only $200 short because of the charges deducted by the supplier, and then you can get it. Samples received for $450 through courier, payment not to be sent. Bill of entry has been generated. Now, here the error is that at the time of import or clearance at the port or airport, it has not been declared as a sample. And because of that, the bill of entry does not have a wording NFEI. You have to get it corrected by the customs, maybe file a challan for $1,000, make a representation then tell them that there is no change in valuation, etc., goods description, etc. This is only a technical error that we have missed to declare it as an API. If they can consider, put it in writing, get a letter from them, then go to the bank to close the bill. Import parcel receipt of 15,000 directly supplied on 180 days DA basis in January, payment not made. Now, from 22, payment is not made because of dispute. You have to decide what is to be done. Either he will file a suit on you if there are quality issues, if you are able to prove it, if your supplier agrees to write it off. Okay, he says, I don't want money. And you have supporting documents, you can go to the bank for write off because it is a quality issue. But I have another problem here. I have an importer who has got millions of dollars of import pending from 16, 17 in a gems and jewelry segment. And that money has not been paid. And now nobody knows who is going to allow for that. Roughly 10 million plus dollar amount. It is to be paid. If it is lying there, sooner or later the case goes to ED for maybe some compounding, etc. Advance paid for $29,000 made against imports in December 22. Supplier not shipped the goods and not responding. So how do you write off? You have to take all efforts to recover this amount because it is the country's dollars which have not been paid. You cannot just write it off. Banks are not going to permit write off like that. Advance payment sent for $800 for import of one item of tools as sample. Courier received no bill of entry filed. Now, if you have sent advance payment, then it is not free. It is a paid sample. Courier received bill of entry should have been filed by the courier. You have to see whether this bill of entry can be filed now. Otherwise, $800 write-off will be a bigger problem now. We have handled a case for roughly $400 advance payment sent, courier not received, no bill of entry pending. It was very difficult. It took 1 year to get RBI approval to close that. Some of the specific issues. Correct details in BOE, currency drop down, etc. not maybe ensured. When you give a draft copy of the bill of entry to the importer, make sure that he has got sufficient good manpower to check it. ED code is missed or incorrect where multiple banking exporters, importers are there, particularly in case of CHAs. Whenever you are importing goods directly, ask your supplier that they should mention free sample on the invoice. Sometimes they do not mention free sample, and because of that, the couriers make mistake. It is actually not a mistake by the courier because what they will file the bill of entry on the basis of the invoice which is attached with the parcel. Buyer and consignee third party details not mentioned. Imports for re-export for repair, exhibition, etc. not properly declared on bill of entry. It should have a link or correlation with the shipping bill. Sample imports free of cost, NFEI not mentioned, particularly CSB 4 in case of exports or CBE in case of CBE 15 in case of imports. AD code missing in ACZ below entry. Now, bill of entries were filed, but in ACZ, there was earlier a provision that in the ACZ online you could skip filing of the bill of the AD code, then it could be done. So there are a large number of cases pending in this manner. And the CHAs, custom brokers, freight forwarders need to support the importers in getting the bill of entries corrected from the customs wherever it is possible, not relating to the quality, quantity, total amount, etc., but for certain declarations, repairs, etc. So this is all from my side. Questions I will take now. Thank you very much. These are my details. For any subsequent connect, please take down my number and get in touch with me on WhatsApp or email. The last line to say, if you do not believe in compliance, I must comply when I am on road. If I do not believe in compliance, try non-compliance. There will be a policeman standing under a tree somewhere, hidden from the camera, but some camera will catch me somewhere today, tomorrow, any day. Yeah. Thank you. Thank you very much. We can take the questions now. Just go to the chat and then see. There's one question from Ankit ji. Sir, B is HSS buyer or C is HSS buyer? In our example, I had given A as importer, B as supplier from abroad, and C as HSS buyer. So C is HSS buyer, not B. Maybe in PPT somewhere B or C could be, I would have wrongly mentioned. Will you be sharing the PPT? Regret, no. But I think JBS is going to upload that in. You can get a link from JBS in subsequent time. So it could be there in YouTube also. What is ORM? ORM is a outward remittance memorandum. Whenever outward remittance is sent, bank is generating a reference number, and that reference number is there to control the outward remittance to be matched with bill of entry. So by matching the outward remittance and bill of entry, those entries are knocked off in the IDPMS system. Any more questions? If anybody has a question, you can raise hand also, and then maybe get unmuted. Till when a bill of entry remains in the IDPMS, till it is closed through ORM or through other write-off measures, approval methods, etc. Till the time because it's a permanent data. It has to close and then it will go into the close. It will come out of that follow-up method. But that data bank is there. It is not going to be washed. It may be purged and taken somewhere out after 5 years, 10 years. But it will not be closed. Only closed bill of entries will move out of the follow-up track. Otherwise, it will be there. How to drive the HSS? How to derive the HSS amount, whether difference or 2%? HSS amount, how the difference is there, sir? If I imported goods for $10,000, then I am supposed to make a remittance for $10,000. Who is going to make a remittance? The actual importer, that is the HSS seller. HSS buyer is only paying in rupees at today's rate or whatever rate they decide. So HSS buyer, there is no ORM for him. Only ORM is there for HSS. Why this 2% difference is there? 2% could be a charge, but it is paid in rupees only. It is not to be deducted out of the $10,000 or paid above that. I hope the answer is given here. If anything more is there, you can again put it in chat or maybe raise your hand to ask.
Sir, relating to my question, till when a bill of entry remains in IDPMS? You mentioned that the bill of entry has to be closed. The closure of a bill of entry means where? From customs or from?
No, from the banking side.
Okay.
You see, when a bill of entry is generated, the customs will upload the bill of entry in the RBI software of IDPMS. And then IDPMS, it will go to that particular bank. So they can view it every day. Now, till you make the payment and ask the bank that this payment is against a particular bill of entry, till then it will remain open. So that needs to be matched. So if I have made a remittance for $10,000 and if I have made a payment of $5,000 today, I should tell the bank that this is a part payment for $5,000 against a bill of entry of $10,000. So they will close that $5,000. Now that bill of entry will show $10,000 total value, balance available $5,000. Now from the same bank or from any other bank, you can go and send another $5,000. The only thing is that when you go to different banks, you have to give the complete set of documents to each of the banks, the bill of lading, the invoice, etc.
Okay, sir. Thank you. Sir, can you briefly explain this Nostro account and Vostro account?
I will. Each bank has an arrangement with a foreign bank. And they will have multiple foreign banks for multiple currencies. So maybe a bank will have a dollar account with some bank in New York, a euro account with some bank in Frankfurt, a pound account with some bank in London, a Japanese account with some bank in Tokyo, a dirham account with some bank in Dubai, a ruble account with some bank in Russia. All these accounts which a bank in India has abroad in foreign currency are called Nostro. all accounts of Indian banks in foreign currency held with banks abroad are nostro. My account with you. My account means Indian bank's account with you means foreign bank. And foreign banks also, for facilitating rupee payments, they might also require rupee accounts here with banks in India. So your account with me, foreign bank's account with banks in India, which is in rupee because it is our currency. So that is nostro and vostro. So it's a reference given that when I refer to an account, I will say to payment should be made through my nostro account or payment may be made through your vostro account. So bank uses this terminology, but it is what you, if you are having an account with say SBI and SBI has got a dollar account with American Express, or maybe Bank of Baroda has got a dollar account with Chase Manhattan Bank, so they will refer that account as a nostro account for their own internal.
So suppose one import is done by me and I have remitted, I have done the outward remittance to the supplier, to the manufacturer overseas. Now I find that the cargo, I clear, I do a bill of entry and clear the shipment. Okay, the transaction gets over. But if I find that my cargo is damaged or it is not appropriate for me to import, I send it back to the overseas. Can I send it back to the overseas
Yes.
supplier?
Yes.
And the
You
money
can
can
send
be
it back to
taken back?
overseas. You can send it back to the overseas party, generate a shipping bill.
Yes, sir.
Now, there are 2, 3 things. If you are sending it back for repair and return, one option. So you can get a you can generate a shipping bill saying that these goods are going abroad for the purpose of repair and then they will come back. When they come back, you get a bill of entry again. In that bill of entry, you have a mention of shipping bill, and then that gets closed. You give the documents to the bank. I have shipped these goods. These goods have returned back. I have a shipping bill. I have a bill of entry. Both will get matched. Same value. Now, suppose you are returning the goods for permanence. Sir, I don't want these goods. There is no repair possible. These are, maybe the quality is not good. Nothing can be repaired. Then you have to get the money back. So
Yes, sir.
when you ship, you get the money back. So either your ORM gets closed with the inward remittance and your bill of entry gets closed through a GR. There's a GR waiver process for refund return also, either GR waiver or your shipping bill. But you should always mention the cross reference. In the bill of entry, the reference of shipping bill. In the shipping bill, the reference of bill of entry.
Okay. Right.
So that you don't pay the taxes. Otherwise, you'll have to pay import tax again, import duty again.
Right, sir. Thank you, sir.
If you are a digital course and getting payment from foreign students, it is allowed as per FEMA. Yes, it is export of services. Online training, tuition classes are export of services with the gentleman Dhaval Gandhi. So it is an export of services. This is permitted there, and you can get the money, declare properly, raise invoice properly, have your maybe GST invoices filed, and then declare to the bank, get that amount into your current account because then it's a business. Don't take it in savings account regularly. One off is okay, but if you are a regular service provider on export of services, including teaching, training, coaching classes, open a current account and do it on a regular basis.
GST is compulsory, sir, for that?
Sir, in domestic trade up to 20 lakhs, it is not compulsory.
Okay.
In domestic services, it is up to 20 lakhs, it is not compulsory. For exports, I think that it is compulsory. The bank will also ask on that. So you should check again with your chartered accountant and then go ahead. I'm not an expert on that, so maybe will not have that clarity on that.
Okay. Thank you, sir.
For detailed learning of all logistics subjects, visit www.logiveda.com.